In this video, brought to you by PayMe, Payroll Filing Made Easy, I'll explain in detail how to complete Federal Tax Form 941, the COVID-19 version, which taxpayers must use for the second, third, and fourth quarters of 2020. If you want a quick overview, check out our COVID-19 Form 941 summary video. To simplify the process, I'm using a web-based solution provided by PayMe, which has joined forces with TaxMe, an authorized IRS e-file provider. The solution is offered for free, but there is a cost to e-file the form with the IRS. Here's the PayMe website. From here, click e-file, the 941 button, and then click 941 again to get to the US version. On the top of the form, click Form Q2 2020. This other button is for the historic version of the form. What I like best about this solution is how simple it is to use. You can expand and collapse parts as necessary by just clicking on them. White fields require user input, while gray fields are automatically calculated by the software, including all of new Worksheet 1. Blue lines represent new COVID-19 data fields. Once done entering your information, click on the Validate Form button to check for errors. If there are none, the part will reflect Complete in blue. After clearing any errors, the Download button will activate. Click on it to save or review the form and schedules before making payment. Make a mistake? Just go back into the form and correct, revalidate, and re-download. If satisfied, pay to have it e-filed and receive an IRS acknowledgement by email within a couple hours and guaranteed within 24. Easy, accurate, secure. Let's jump into the form. Here's a side-by-side comparison to the actual form, which we'll use during part of the video. As background, Form 941, Employer's Quarterly Federal Tax Return, is a federal form employers use to report income taxes, Social Security taxes, or Medicare tax withheld from employees' paychecks, and report the employer's associated obligations. In general, if you pay employees, even yourself, then you will be required to use the form to report information to the IRS quarterly. For small taxpayers with less than $1,000 tax liability, there's an option to file annually using Form 944. But be careful, you need IRS written permission to use. In the spring 2020, the IRS updated Form 941 to collect information about the new COVID-19 incentives, expanding the form from 2 to 3 pages and adding 58 new data fields. Form 941 itself has 20 new data fields, which we highlight in blue, and there are an additional 38 fields in new Worksheet 1. The design of the updated COVID-941 is odd, and the approach may confuse some taxpayers as entries from the end of the form, Part 3, are used to complete Worksheet 1, which then feed into lines from the beginning of the form, Part 1. To begin, enter your business name and address. International filers, click here. Then enter the filing quarter. Your Form 941 is due by the last day of the month that follows the end of the quarter. For example, for the second quarter covering April, May, and June, you must file the form by July 31st. Here's an overview. A couple tips. You cannot e-file your return until the quarter actually closes. This limitation doesn't apply to paper filers. 2. If you timely made all your tax deposits, the IRS gives you an extra 10 days to file. Thus, the July 31st second quarter deadline would be extended to August 10th. Line 1. Enter the number of employees who received wages during the relevant quarter. Count all employees, whether full-time, part-time, or seasonal, basically anyone who received wages during the quarter. However, do not include independent contractors, farm workers, or household employees like maids or housekeepers. Also, don't include seasonal workers if they didn't work in the particular quarter. When counting employees, you may have a different count depending on the day because of turnover. According to the IRS, you count the number of employees who worked during the 12th day of the last month of the relevant filing quarter, or on March 12th, June 12th, September 12th, or December 12th. For example, for the second quarter, if an employee is paid weekly and paid on June 4th and June 11th, but the employee is not paid on June 18th, which includes June 12th, the employee is not counted as an employee for line 1. In this example, we'll use 10. Line 2. Wages, tips, and other compensation. This line picks up amounts that would be included in Form W-2, Box 1, taxable income. It includes total wages, bonuses, fringe benefits, and an employee expense reimbursements. Don't enter gross income or adjusted gross income, as the amount is reduced by non-taxable items such as 401k retirement contributions. In this example, I'll enter $105,000. Line 3, federal income tax withheld from your employees during the quarter. This number cannot be derived from the line 2 amount because it's an aggregate of the withholding from all your employees, who each will have different withholding requirements depending on their Form W-4 allowances, their particular tax bracket, their retirement contribution amount, etc. You typically need to get this from accounting software, a spreadsheet, or other system used to track the information. In this example, I'll enter 30,001 cent. I'm adding 1 cent to make the math easier when I later show an adjustment. Line 4. If you have no wages, tips, or other compensation that is subject to Social Security or Medicare tax, click the box. Notice how the software automatically deactivates non-applicable data fields. Before discussing lines 5A through 5E, notice the different tax rates. Line 5A shows a 12.4% rate, which represents a 6.2% rate for both the employer and the employee. The employer withholds the 6.2% from the employee, but must pay the employer's share itself. The amount is subject to the Social Security wage limit, which is $137,700 for 2020. Lines 5A1 and 5A2 rates are only 6.2% because by law these amounts are excluded from the employer portion of Social Security tax. Line 5C shows a 2.9% rate, which represents a 1.45% rate for both the employer and employee. Line 5D shows a rate of 0.9%, which is an additional Medicare tax and is only paid by the employee. As a tip, if no employee reached the Social Security limit, the amounts on lines 2, 5A, and 5C historically would be the same. However, this won't be true under the COVID-19 version of the form if the person has qualified sick or family leave wages. Line 5A, taxable Social Security wages. While not new, be careful with the entry. It includes total wages, including qualified wages from the Employee Retention Credit, but it does not include qualified sick leave and family leave wages, which are reported on new lines 5A1 and 5A2. As historically done, businesses should stop reporting when Social Security limit is met, which is $137,700 for 2020, but to reach this threshold, taxpayers should consider qualified sick leave and family leave wages reported separately. In this example, I'll enter $100,000 in line 2. Notice how the software automatically calculates the tax. Without it, you would have to manually calculate. New lines 5A1 and 5A2 are highlighted in blue. These have their own new line to capture their unique status of being excluded from the employer portion of Social Security tax. These new amounts are both limited to the 2020 Social Security limit. Excess amounts are reported in Worksheet 1, not on the revised Form 941 itself. Our solution captures it here to help auto-populate Worksheet 1. Also, for clarity, from your employee's perspective, both these amounts are wages subject to federal withholding, the employee's share of Social Security, and Medicare taxes. The amounts also count as wages for 401k plans. For this example, I'll add $2,000 in qualified sick leave and $3,000 in qualified family leave wages, using different numbers to help differentiate. Line 5B, taxable Social Security tips. In line 5B, report any tips reported to you by your employees. In this example, we'll leave this as blank as Test Company is not in the tip business. Line 5C, taxable Medicare wages and tips. Enter all wages, including qualified sick leave wages, qualified family leave wages, and qualified wages for the Employee Retention Credit. Also include tips, sick pay, and taxable fringe benefits subject to Medicare tax. Unlike other lines, there is no Social Security limit on the amount of wages subject to Medicare tax. In this example, I'll enter $105,000, $100,000 from line 5A, plus separately stated $2,000 and $3,000. Line 5D. This 0.9% tax applies to employee wages paid in excess of $200,000. In this example, we'll assume none. Line 5E. Total Social Security and Medicare taxes. This line is calculated. Add column 2 from lines 5A, 5A1, 5A2, 5B, 5C, and 5D. Again, without software, you would need to manually add. Line 5F. This is not a common adjustment, and applies only when the IRS sends the employer a Section 2131Q notice and demand letter regarding unreported employee tips. The notice requires the employer to include an extra tax as an adjustment. Line 5F1 captures some additional information from the notice which is relevant for completing Worksheet 1. In this example, we'll leave it blank, assuming no notice was received. Line 6, total taxes before adjustment. This line is calculated by adding lines 3, 5E, and 5F. Lines 7 through 9 are used to report various adjustments. Line 7, current adjustment for fractions of cents. Social Security and Medicare taxes are calculated for every employee every time you run payroll. Since the resulting calculation will often include fractions of cents, the amount is rounded to the nearest cent to determine the actual amount to withhold. Because rounding occurs multiple times when paying employees, and the tax liability as calculated on Form 941 is only rounded once using the aggregate wages for the period, there can be a mismatch between the two. The line 7 adjustment, which can be negative or positive, is entered to correct this mismatch. In this example, I'll add a 1 cent adjustment to show how it works. Line 8. This sick pay adjustment applies when the employer uses a third party, such as an insurance company, to pay sick pay. When split liability occurs, the third party and the employer both must file Form 941 and both must report the sick wages. Because this reporting doubles the amount of FICA, each must use line 8 on their respective Forms 941 to adjust. It must be a negative number. Tip: this is different than the COVID-19 qualified sick leave. Since this is uncommon, I'll leave it blank for our example. Line 9. This is not a common adjustment and applies to report unreported tips or certain group term life insurance payments. If there is an adjustment, it must be negative. Again, I'll leave this blank for our example. Line 10, total taxes after adjustment. This line is calculated. Combine lines 6 through 9. Line 11A. Use this line to report R&D tax credits to allow small businesses to offset R&D costs against payroll taxes withheld. To claim the credit, you must report it here along with a completed Form 8974, which must be attached to your Form 941 submission. Note, PayMe does not support this credit. In our example, I'll assume it doesn't apply. New lines 11B to 11D. These lines report the non-refundable portion of credits for qualified sick leave and family leave wages and the employee retention credit as calculated on new Form Worksheet 1. Credit for qualified sick and family leave wages and the employee retention credit. As background, to facilitate accurate reporting, the IRS bifurcates credits into a refundable and non-refundable portion. The non-refundable portion of the credit is still a credit and it offsets the employer's Social Security tax. The revised form is designed to reduce any employer's Social Security tax to zero first, and then any excess becomes refundable. Thus, the non-refundable portion of the credit is the amount used to offset the employer's share of Social Security tax. The reduction of the employer's Social Security tax follows in order. First, small business research credits on Form 8974. Second, work opportunity tax credit on Form 5884C. Third, qualified sick and qualified family leave credits. And finally, fourth, employee retention credit. Worksheet 1. To facilitate reporting, the IRS created Worksheet 1, which you keep in your records. Use it to help determine the refundable, non-refundable portion of the new COVID-19 credits. While the worksheet looks intimidating, and here's a picture of it, the worksheet itself only requests 4 new entries, highlighted here. While these are typically uncommon for small businesses, and I'll let you read them for yourself, we add a line item for each should they apply to you. If they don't, just leave them blank. The rest of the worksheet can be auto-populated based on information already entered in Form 941. And again, if you don't use software, you'll need to manually complete all 38 fields yourself. For now, we cannot complete any of these new lines 11B to 11D because each requires data inputs later on in the form. At the end of this video, we'll show Worksheet 1, completed for this example. Line 12 is total taxes after adjustment and non-refundable credits. This line is calculated by subtracting 11D from line 10. Line 12 is very important as it's often referenced and needs to tie to other parts of the form. For now, let's note the amount which is $40,682.50. Line 13A. In addition to filing Form 941 quarterly, the IRS also requires companies to deposit income and FICA taxes throughout the quarter. While I'll talk about this topic in more detail later, companies generally deposit either monthly or semi-monthly, depending on the size of the company's tax liability during the look-back period. For now, know this line represents total deposits for the quarter, including overpayments applied from a prior quarter and overpayments from an amended Form 941X. Ideally, line 13A should match line 12, so there is no balance due or overpayment, but it's often not the case, and if it happens, it's not a problem. New line 13B reports the amount of Social Security tax the employer chose to defer during the quarter. This is a key new benefit as it essentially gives taxpayers an interest-free loan of up to 18 months. Under the COVID-19 incentives, businesses, regardless of size, can elect to defer paying the employer's share of Social Security tax on wages paid from March 27th through the end of 2020 until December 31st, 2021, when it will pay 50% of the deferred tax, and December 31st, 2020, when it will pay the remaining 50% of the deferred tax. Caution: while this deferral is not available if the business receives a Paycheck Protection Program loan, taxpayers may defer the tax until a decision to forgive the loan has been reached by the lender. Also, the IRS permits taxpayers to defer the deposits and payments, not the liability, so taxpayers won't receive a refund or credit of any amount already deposited for the quarter, as taxpayers cannot defer what they've already paid, but you should be able to change your initial deposit classification. As a benefit, the IRS allows a business to defer this amount before determining the amount of payroll deposits it must make and before any allowable refund of payroll tax credits. In this example, we'll add $6,200, which is the maximum amount available with these numbers, or $100,000 of Social Security wages times the employer's Social Security rate of 6.2%. New lines 13C and D report the refundable portion of the credits for qualified sick, family leave, and employee retention credits as calculated on Worksheet 1. New line 13E sums the credits. For this example, we'll also need to wait on these numbers until Worksheet 1 is completed. New line 13F reports total advances, if any, received from the quarter from filing Form 7200 Advance Payment of Employer Credits Due to COVID-19. Form 7200 can be filed multiple times during the quarter, but it's completely optional. Caution: if you file Form 7200 after the end of the quarter, the IRS could process your 941 first. In such case, the IRS will update the amount of the credit to match its records or contact you to reconcile the difference. For this example, we'll assume that there are no advance credits requested. New line 13G reports the total deposits, deferrals, and refundable credits less advances. The amount is calculated by subtracting 13F from 13E, and like other lines, it can't be determined just yet. Line 14, balance due. This amount is calculated. When a return is filed by paper, any balance due can be paid with return by including a check and using payment voucher 941V. When e-filed, the taxpayer must pay electronically, which the IRS considers a separate process from filing a return. To pay this balance, you can either pay through the IRS Electronic Federal Tax Payment System, EFTPS, which is a tax payment service provided free by the U.S. Department of Treasury, or you can use another service provider, such as TaxMe. A note of caution: the IRS provides a de minimis exception that applies if line 12, total taxes after adjustments and non-refundable credits, is less than $2,500, or line 12 was less than $2,500 in a prior quarter and the taxpayer didn't incur a $100,000 next day deposit obligation during the quarter. For amounts above the de minimis exception, the IRS can impose penalties. In this example, there is no balance due. Line 15, overpayment. If applicable, you must indicate whether you want the overpayment to apply to the next return or have the IRS send you a refund. In this example, there is an overpayment, so we should choose one. However, for purposes of this example, to engineer at least one error, I'll leave it empty. Under different facts, if there was a balance due payment, you could just click this button to activate the banking fields. Then, just add your banking information and pay the balance together with e-filing the return. up to the maximum amount allowable of $2,500. The IRS will subsequently debit your account. Caution: if the payment is rejected by the IRS, for example, because an incorrect routing number was used, it will cause the entire return to be rejected. Part 2, Line 16, Deposit Schedule. As mentioned, in addition to filing returns, the IRS also requires employers to deposit taxes, which must be done electronically by electronic funds transfer, unless the taxpayer qualifies for the de minimis exception previously mentioned. To report your deposits, the IRS provides 3 choices. You must select radio dial button 1 if line 12 is less than $2,500 in the current quarter. You may also choose it if line 12 on the return for a prior quarter was less than $2,500 and you didn't incur a $100,000 next day deposit obligation during the current quarter. The second radio dial button is used by monthly depositors with more than a $2,500 tax liability in the current quarter. The third radio dial button is used by semi-weekly depositors. As background, except for the de minimis rules, payroll taxes are typically paid monthly or semi-monthly, depending on the amount of the employment taxes paid by the employer the previous years. Your deposit schedule isn't determined by how often you pay your employees. Your deposit schedule depends on the tax liability you reported on Form 941 during the previous 4-quarter look-back period, which is July 1st of the second preceding calendar year through July 30th of the preceding calendar year. For example, for 2020, the look-back period is July 1st, 2018 through June 30th, 2019. If you reported $50,000 or less of Form 941 taxes for the look-back period, you're a monthly depositor. If you reported more than $50,000, you're a semi-weekly depositor. Tip: under these rules, new employers will always be monthly depositors for the first year, provided the $100,000 next day deposit rule isn't triggered. Under the monthly deposit rules, you must deposit taxes accumulated on payments made during the calendar month by the 15th day of the following month. Under the semi-weekly deposit rules, if the payment day was on Wednesday, Thursday, and/or Friday, deposits are required by the following Wednesday. If the payment day was on Saturday, Sunday, Monday, and/or Tuesday, deposits are required by the following Friday. If you're a semi-weekly depositor, you must also complete Schedule B. This is a separate schedule that needs to be filed with part of your return. When completing Schedule B, you report your tax liability for the quarter on each day of the 3-month period. Don't use it to show your tax deposits. You record it on the payday. Accordingly, pay special attention to the difference between the date you pay your employees, the payday, versus the pay period over which your employees worked, the pay period date, versus the date you deposited the associated tax payments, the deposit date. For example, if your payroll period ended on December 31st, 2019, and you paid the wages for that period on January 6, 2020, you would report the data on the pay date January 6, 2020. You do not report this tax liability on the pay period date of July 31st, and you do not report this tax liability on the deposit date. Whether you're a monthly or semi-monthly depositor, the total tax liability for the quarter must match Form 941 Line 12 liability. In our example, recall the amount we initially noted was $40,682.50. This calculation is tricky under the COVID-19 versions, as items from Part 3 can change your Line 12 liability. Thus, if you go straight through the form sequentially, Line 12 may match initially, but you could get an error when you file due to subsequently added information. In our example, we'll illustrate this point, which software can help identify and correct. Tip: TaxMe also makes completing Schedule B easy. When you click the third radio dial button, new fields spring to life. Just enter the date and the amount, and the software will auto-populate Schedule B for you. In this example, I assume the employer paid its employees twice a month on the 1st and 15th, and assume the tax liability is $1,000 for each. The $1,000 takes into account any COVID-19 reduction to the liability. In addition, I'll add a third payday on June 30th, which I'll use as a plug to help highlight an issue. Part 3, about your business. Use line 17 to notify the IRS your business ended. If you don't, you must continue to file or e-file Form 941 every quarter after the initial filing, even if you have no employees during some of the quarters and even if you have no taxes to report. In this example, we'll assume the business didn't go out of business. Line 18. Use line 18 to notify the IRS you're a seasonal filer. That is, if you hire people seasonally, you only need to complete Form 941 for the quarters they worked, full or part-time. To tell the IRS you won't file a return each quarter, you will need to check line 18 every quarter you do file. In this example, we'll assume there are no seasonal employees. New lines 19 through 25. In Part 3, the IRS added 7 new data fields related to the COVID-19 payroll tax incentives, including lines 24 and 25, which are only used for the second quarter 2020 to report qualified wages related to the employee retention credit that arose in Q1. These responses feed into Worksheet 1, which are then used to calculate answers to Part 1. Thus, after entering these items, you can finally complete Worksheet 1, which then allows you to go back and finish Part 1 entries and then recalculate. Our solution will update this for you. In our example, we'll add 2,000 in line 19, 3,000 in line 20, 10,000 in line 21, and 1,000 in line 22. We'll also leave lines 23 to 25 empty. In the instructions, the IRS briefly describes each entry, but then relies on the taxpayer to research and understand the law. While the IRS provides only limited guidance in lines 19 through 25 themselves and doesn't provide any data check to ensure the entries are reasonable, the IRS does provide a more robust discussions earlier in the instruction and has a wealth of additional information on its website. While a detailed discussion of the COVID-19 employer tax incentives is beyond the scope of this video, we did prepare a summary chart which you might find helpful. Here's a screenshot. If you want our Form 941 white paper for small businesses, which includes a summary chart, please email us at info@paymellc.com or otherwise contact us using our website's Contact Us button. Part 4. May we speak to your third-party designee? Your third-party designee is any individual who you authorize to discuss your Form 941 with the IRS. This individual is typically an employee or tax preparer, but it doesn't have to be. However, it is not the name of the firm that prepared your return, but it can be the name of the individual working at the firm. To authorize, mark yes and fill in the designee's information and self-select a 5-digit PIN. You are not authorizing your designee to bind you to anything, including additional tax liability, or to otherwise represent you before the IRS. The authorization automatically expires 1 year from the Form 941 due date without regard to extensions. However, you can always terminate it sooner by writing to the IRS. The final section. If someone else prepares Form 941 for your company, the preparer must fill out the Paid Preparer Use Only section, unless the preparer is also an IRS-designated reporting agent. This section includes the preparer's credentials, including whether the preparer is self-employed. For clarity, you do not need to complete this section if 1. You are filing the form for yourself, 2. You are an employee of the filing firm, or 3. You are a paid preparer but also a reporting agent. That is, you have a valid Form 8655 on file with the IRS. However, the IRS provides an exception to the exception and does require the reporting agent to complete this section if they provide legal, not tax advice to their clients. Tip: when e-filing, reporting agents should sign payroll tax returns using their own name, not the name of their client. Also, reporting agents should keep Form 8655 in their files. The form does not need to be shared with the ERO and/or transmitter. Validate form. Now that we've entered all our data, let's check for avoidable errors. Click the Validate Form button. We'll need to clear these errors. Part 1. Must select an overpayment option. This was the one I intentionally missed to ensure at least one error. Part 2. Total liability on Schedule B must equal total taxes after adjustment and credits. This occurs because line 12 doesn't match Schedule B total. Recall initially it was $40,682.50. However, because of subsequent inputs, it's now $39,555. Part 6 occurred because I didn't sign the form. Let's go through and fix these. Once all errors are corrected, revalidate. If all parts show completed in blue, you're ready to download. Click the now activated green download button and the software will populate your forms for you to review and save a copy. Let's review the example we just worked on. The download has Form 8879 EMP, which authorizes the user to e-file with us. It has Form 941 itself, all 3 pages. Let's review them. Notice how the software auto-populates the calculated fields and, importantly, the refundable and non-refundable portions from Worksheet 1. Caution: this is an e-file copy for your files and cannot be sent to the IRS. If you do, the IRS will reject it and you will be required to refile. It has Form 941 Schedule B. Notice how the software adds your data in the correct spots. It also has Worksheet 1 fully completed. Notice how the form works. It reduces the employer's share of Social Security tax to 0. In this case, the $6,200, which was used entirely by the sick and family leave credit, leaving $3872.50 refundable, which was moved to line 13C. Worksheet 1 also shows that all of the employee retention credit is available, which was moved to line 13D. While it wasn't needed in this example, our solution would also seamlessly work for more complex situations. Before finishing up, one last point about penalties and a word of caution. Because the IRS relies on the revenue from this form, it imposes steep penalties for failing to deposit, file, and/or pay. Failure to deposit penalties range from 2% of the amount due if your payment is 1 to 5 days late to 15%. Failure to file penalties are 5% of the total tax amount due. You will continue to be charged an additional 5% each month the return is not submitted to the IRS up to 5 months, or 25% max. Failure to pay penalties are 0.5% of the unpaid tax increased each month the payment remains unpaid. The maximum amount of the failure to pay penalty is also 25% of the tax due. And if both the failure to file and failure to pay penalties apply in the same month, the failure to file penalty is reduced by the amount of the failure to pay penalty. The IRS also imposes trust fund recovery penalties, which are 100% of the unpaid trust fund tax due. Finally, in addition to all the penalties, interest accrues on any unpaid balance. Accordingly, as hopefully this discussion highlights, it's very important to both timely file and timely deposit. Thanks for watching this video about how to complete Form 941, including the new COVID-19 employer tax incentives. If you made it this far, congratulations. Congress certainly didn't make this simple, but hopefully we can make it a little easier for you, whether completing by hand or using our solution. Please visit our website, www.paymellc.com, and please tell your friends and colleagues about us. Thanks for watching.